Ladies and gentlemen, I welcome you all to the H2 and FY25 post-earnings conference call of Forcas Studios Limited. Today, on the call from the management, we have with us Mr. Sailesh Agarwal, Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the investor presentation along with business and performance highlights for the year ended 31st March 2025, post which we will open the floor for Q&A. Over to you, Sailesh.
Hello, good morning, everyone. Thank you for joining us today for our earnings call. I am excited to share our progress and achievements over the past year, as well as our strategic vision for the future. I am pleased to announce that Forcas Studio has witnessed significant revenue growth throughout the year. So we will start with our presentation first, our presentation deck. So we are an apparel brand, especially for the masses. The brand, the range, the line is all targeted toward the masses, the tier 2, tier 3 cities of our country. So we are a company with 14 plus years of experience. We specialize in menswear category. We have our business both offline and online. We have distributors come wholesalers in our offline segment across 8 to 9 states. We serve to almost 15,000 plus retailers. Online, we are present in 10 plus marketplaces, all the leading ones such as Myntra, Flipkart, Solve, Snapdeal, JioMart, Amazon, Ajio. We have a huge menswear line, which is live. We have 1600 plus SKUs. We are present in 500 plus large format stores as well. And we are glad that we have successfully served over 3 million customers till March. Next slide. So the management team comprises of me and my brother. I am the CEO and Managing Director. My brother Saurav is the CFO and full-time director of the company. So this is our journey in brief. We started in 2010 as a white label manufacturers for all the large format stores in the country. We have been dealing with everyone right from, the D-Marts, the Reliance, the Vishal Mega Mart, the West Side Pantaloons. From there, 2015, we were recognized for our services to all these corporates. Forward to 2021, we started with our online marketplace sales. We basically are a marketplace player. We don't sell through our own website. We do 100% of our e-commerce business through marketplaces. So in the first year of our business itself, within first 6 months, we were awarded as a gold seller status on Flipkart. And we progressed to platinum next year. So just to give you a brief, 21 approximately, in the first 6 months, we did around 50 lakh rupee of revenue. Within 22, we did around 50 crores in our brand. By 24, we have closed 112 crores, and 2025, we have closed around 140 to 143 crores. So this is our business model. So we are an asset-light model. What we do is we identify latest global trends. We see a huge gap in the market for a price point which is below 499 and 599. So basically, all the brands are above this price point. And the 80% of our country, the market is below this price point. But the entire market is led by, unlabeled, non-branded goods. So we are going to create a brand in that segment. So we have targeted the range of 199 to 599. 95% of our range lies between that. 5% is above that. So it starts with identifying new trend. Then we have our design development team, which converts the design from the idea within 7 to 10 days. Then we have our fabric sourcing. We outsource our manufacturing part. We have a robust QA team, which is well trained because of the 10-15 years service as a white label manufacturer. So we have our systems in place. Then we have our distribution channel through our warehouse, and we are present in 8 states. And then we sell through multiple channels in our brand, such as I just explained, marketplaces, distribution, wholesale, and also few large format stores. We still also do white label manufacturing for about 20% of our capacity to the larger players. So we have a integrated warehouse in Calcutta. We have 30,000 plus square feet area. We can hold around 2 million units. 6 lakh meters plus fabric is stored with us any given point of time. And we are also using 8 plus warehouses for from a third party in 8 different states of our country. So today, any product of ours is available within, if you order through an e-commerce, within 24 hours to 72 hours. We have just been launched in Zepto also as a quick commerce segment, and there we are delivering within 20 minutes, and we are available in 76 cities now. So this is our product line. So we do complete menswear portfolio, such as boxers, shorts, track pants, cargos, denims, trousers. We cover all. There are 13, 14 categories. We cover all. So FTX is our leading brand. 74% of our business last year was from FTX, which has increased to 95% this year. Next slide. We have also come up with our brand Tribe, which targets to the market between 599 to 999. It is mostly for the upscale metro city customer, where we are serving them through retail chains and through websites, platforms like Myntra and Ajio. So this is our revenue breakup. So this is our mantra. We are going to be the brand for the urban Bharat, for the value seeker customer, for the Gen Z generation, where the design quotient has to be high, the price has to be affordable, and they should get it quickly. So this is our way of launching any design. So we launch all our new SKUs with a very small quantity. We get them live in 10 plus marketplaces and our offline channel. Then our data analysis team, analyze the data of how it is going, which designs are doing better, which is going slower. So wherever we see traction, we scale the production of those designs, and whatever has less traction, we dilute it and close it. And then we invest rapidly on the designs which have traction and scale them. So these are our main, strengths. Innovative product designs, as I just explained you, we try to capture on the latest trends. Offering fashion to the new Bharat, we want to offer the latest fashion, which, today's Instagram generation is seeing on his mobile as a global fashion. We want to offer the same to them at their price point, at their home. So our brand recall is pretty good. We have more than 4-5 lakh positive reviews in both Amazon and Flipkart. We are serving to almost 19,000 plus pin codes. We have a strong customer relationship. Our review ratings are also 4 plus. So our return ratio is also 9% to 10%, which is half of the industry standard. We offer a wide product range. And for our team, we have been in the business since 15 years. So we know the in and out of the business. We are still learning and try to improve. But we believe that, this lower price point game, we understand this and we are trying to expand it quickly. So this is our online customers, online marketplaces. So we have just begun our quick commerce journey. I believe quick commerce is going to be a game changer in terms of fashion as well. So quick commerce initially started as the grocery delivery service, but quickly it has scaled to many other product line, many other categories. So we are targeting the basic product line in the quick commerce segment. We are also launching many products such as swimwear or gym wear for serving it within 20 minutes to 15 minutes across the nation. We have seen a good response just after being launched within a month on Zepto. And we are in talks with adding 2 more quick commerce platforms to accelerate our quick commerce journey. So we have reached around 140 to 143 crores in menswear. We are coming up with our women and kidswear line. Our women wear is going to be launched next quarter, that is Q2. The goods are already in production. The market research is done. And we are coming up with the bottom wear line for women wear. And the kids wear, we are again, in the research mode right now. And we target to launch it by the end of Q2. So we want to scale both women and kids wear as we did menswear and make it a complete portfolio for our brand. So this is our financial highlights. So our revenue 23-24 was 112 crores. 24-25 we closed at 142 crores, up by 26%. Our EBITDA margin was 10.82 crores, which we closed at 14.23 crores. Our PAT was 5 crores. Last year, this year, it was 8.63 crores, a growth of 71%. So these are the key highlights of our numbers. So the Indian apparel industry is a huge, huge one. As all of us know, it is said to be around a 20-25 lakh crore industry, both organized and unorganized. Out of this, 80% of the goods which is being sold is non-branded. The non-branded segment generally is non-branded because of the price point. So more and more customers are there, but they don't have a brand to buy, but the aspiration is going high, with time, with social media exposure and everything. So our brand targets to convert those customers, serving them with right product, right quality at right price, with fastest possible timeline, and create a brand over there. So our growth drivers has to be the e-commerce, the quick commerce, the sports and athleisure segment, and coming up with women's and kids wear segment. Also, winter wear is going to be a key growth driver for us because we have been experimenting with winter wear since last 2 years and not indulging too much into it. This year, we are going all out with our winter wear line, and we believe we have a plan to, expand rapidly in Q3. So that's it from my side. Any questions, please?
Thank you, sir. Whoever wishes to ask a question may raise their hand or put their question in the chat box. We take the first question from the line of Agastya Dave. Agastya, you can unmute and ask.
Thank you. Am I audible?
Yes.
Great. Thank you, Mr. Agrawal, for doing this call and for the presentation. Sir, I have a lot of questions. I've been following your company pretty much since the DRHP came out. And while the revenue numbers have been as per expectations and the profitability has also been good, the various line items in between revenue and EBITDA, those are moving all over the place. And I am trying to understand exactly what kind of trends, underlying trends, first of all, exist in the business, and second, going forward, we can expect from the business. So the first is that there has been a continuous compression in the gross margins.
In the gross
And
margins.
in the gross margins.
Okay.
And because I could not find any of the previous annual reports,
Right.
I obviously you were not listed at that time, so I don't
Right.
have access to those. So I don't exactly know what all goes in other expenses. What are the line items which go into the other expenses and how they are moving? Because there you are generating a lot of operating leverage. So the first simple question is there a reclassification between the two? Any line items which were earlier in other expenses, have they moved to shifted to COGS? And if not, then can you explain exactly what are the moving parts here? And because the business is also evolving, right? You are going to launch the women's fair, and you mentioned so many other initiatives. Because of these moving parts, how do you see the various cost items moving? And in all these cases, the new lines that you are going to introduce in the market, how will the gross margins behave? Are they significantly different? For example, is women's wear going to be significantly different than men's wear in terms of gross margins? So basically, question gross margin and other income ka hai, sir. But
Okay.
if you can go into details and give a quantitative as well as qualitative explanation as to how should we understand these cost items as the company scales up. That's my first, like, very large question.
आपका जो पहला क्वेश्चन है, your first question was about the other expenses. So I will tell you there are generally
Sure.
three items which goes in other expenses. Number one
Okay.
is our manufacturing expenses. Number two is our selling and distribution expenses. And number three is the other administration and general expenses. So it is
Okay.
always the same. Nothing has been changed since last year or this
Okay.
year. So this is one. And your other question was about the gross margins uh, for the upcoming product line.
No, gross margin, even if I look at the so that is exactly, so whatever you have defined as other expenses, that is how I guessed it. कि उसमें there will
Right.
be an element of manufacturing expenses also because you are outsourcing everything.
Right.
So I was expecting some variability in those expenses, right? But if I look at the numbers, your turnover in the last 3 years has more than doubled, but your
Right.
other expenses are basically flat. 23 crores का 24.6 crores हुआ है. And
हाँ जी.
so I was expecting a bit of variability there because of the manufacturing expenses. And then in the
हाँ जी.
gross margins, your gross margins have compressed from 39% to 29%. So that's a 1,000 basis point compression in gross margins. So that is where I'm like, I was expecting steady gross margins and slightly like some variability in the other expenses, but it's like completely I mean, not as per expectations. So that is what I'm trying to understand. कि exactly हो क्या रहा है? So you have said that there is no reclassification.
आपने जो
So
30
what
no,
exactly?
39 to 29 which you told me, where is that?
Right. So if you look at your COGS, right? So this will be your raw material purchases and change in inventory.
Right.
Those as a percentage of sales in 2023 were at 39%.
Right.
And those, sorry, this is the gross margin I'm saying. So they were actually 61%. And
Right.
then this year they are at 71%. So there is a 10% increase in your COGS, cost of
In the
goods sold.
39%, the gross margin thing, the manufacturing expenses is not considered. If you consider it, then it will become the same. In
Right.
fact,
And this time
we
around,
will come up with some percentage of growth.
so this year manufacturing expenses have been included in COGS.
Right. In other expenses.
No, so I'm not talking about other expenses. Other
Okay.
expenses are separate. Other expenses are constant. Basically 23 crores, 25 crores, and 24 crores. So that's like constant. So usko
Right.
ek second ke liye hata dijiye, and you are saying that manufacturing expenses are housed in other expenses. So let's
Right.
park it in a different category. Just
Right.
look at your COGS, which is your raw
Right.
material, purchases, and change in inventory.
Right.
ठीक है? If I look at those numbers, 42 crores has become 100 crores. When the
Right.
turnover has gone from 70 crores to
So this you
142,
are taking
42.
from 23, right? This you are taking
I'm
from
taking
23.
23, 24, and 25. Yes.
23, we had a lot of stock from the COVID era, from that period.
Okay.
So
Okay.
nothing much was purchased during that. And also we were developing our brand that time. So a lot
Okay.
of, inventory which was old was used to, build the brand. And from the
Okay.
later years, we started procuring more. So, you have seen the numbers of the
So
COGS going high.
okay. So if I look at just this year, right, going back to the presentation. So on slide, this is slide 23. So on slide 23, even if I look at in particular year, so which was FY25, in H1, your gross margins were at 35%. In H2, your gross margins are at 25%, 26%. So again, there's a 900 basis point variability inside the year. And obviously, there is no like COVID related stock thing here.
That is okay.
And
Yeah.
right. So in last year, your second half, I don't have the first half numbers, but in the second half last year, you were at 26%. So there is a mild change YOY, but inside the year from H1 to H2, there is a dramatic decline in your gross margins. The other expenses are ekdam stable. In H1, you were at 12.3 crores. In H2, you are at 12.3 crores. So there is no variability there.
Right.
But the gross margins have compressed. So is it a seasonal thing? Is it like, so I'm just trying to understand because I went through all the data points
I'll
and there
make you
was
understand
no
this.
trend that I could fit. Yeah. Sorry.
23, 24, our blended, gross margin in terms of percentage was 23.32%. And in 24, 25, it is 24.08%. So there is a marginal growth there. So in
ये
terms
कौन
of
सा number है?
ये आपके ईयर का नंबर है 23-24 का
See, year का year का number that I have for FY24, your gross margins were at 33.5%. And for FY25, they are at 29 point some
उसमें
percent.
मैं आपको वापस से रिपीट कर रहा हूँ वो 33 जो आप देख रहे हैं उसमें मैन्युफैक्चरिंग एक्सपेंडिचर आप लिया हुआ नहीं उसको आप हटा दीजिए इट इज 23.32%. अगर आप उसको इसमें ऐड कर देंगे
नहीं,
24
उसमें मैं नहीं ऐड कर रहा हूँ सर, मैं आपको वही चीज मैं बार बार बोल रहा हूँ. If you have, I do not have your manufacturing expenses separately.
राइट
If you have kept it in other expenses, I am not including this in COGS. I am just looking
इसीलिए
at
वो
so
डिफरेंस है
the
दैट इज व्हाई द डिफरेंस इज
no, I think I'm failing to explain the problem, sir. Just go to your presentation that you have given. Go to page number 23.
ओके
Okay, the presentation you were just giving. Go to page number 23, look at FY25 and FY24 numbers. Your gross margins. So this is just 2 years. I was talking about 3 years. So if you include FY23, the number is even more stark. But forget FY23. FY24 में, look at the gross margin number, 33.5%. That has declined to 29.4%. अगर इसमें आपने मैन्युफैक्चरिंग एक्सपेंसेस ऐड, मैंने तो नहीं किया सर. अगर आपने इसमें मैन्युफैक्चरिंग एक्सपेंसेस ऐड नहीं किया है तो इसमें मैन्युफैक्चरिंग एक्सपेंसेस ऐड नहीं है. Then look at same slide. Look at H1 versus H2. there is a 35% gross margin in H1 last year, and there is a 25% gross margin, 25.8% gross margin in H2. So again, there is a 1,000 basis point variation. So I'm just trying to understand what explains this. So there is nothing. And then second thing, as you said, ki manufacturing we outsource. So then there should be some variability there as well. And if that manufacturing is getting clubbed in other expenses, look at your H1 and H2 other expenses numbers. 12.31 crores has become 12.30 crores. So there is no variability there.
Correct.
So I do not have the schedules in front of me. I could not find any of the annual reports, and I obviously
I will ask the auditors to probably share these numbers with you. Number one, number two, about this percentage of 33.5% gross margin last year to 29.4% this year. So it's a 10% variation which you are seeing is
it's a 5%, 400 basis point. Yeah.
Correct. So this is this is the period where we have launched new products. So we were majorly into 4 categories of menswear. Today we are into 14 categories of menswear. So what happens is when you are trying to expand a brand with newer categories, there is a lot of experiments which goes in. So among the experiments, you find your new hero product, and then you go ahead and expand your hero product and you create a line around it.
Perfect.
So this is an ever-going process where these small margin things will sometimes come down and sometimes will go up. So whenever it is an introduction of new product in a fashion business, it is not like a commodity. We never know what exactly will work. So what we do is we experiment with smaller quantities of various designs, and then we try to figure out what is selling and what is not selling. So whatever is not selling, we cut it off, and whatever is selling, we build that.
Perfect. Understood. So then the second part of understood. Then the second part of the question, that you are going to launch a women's line now, and other experiments that other lines that you're introducing, usme bhi experiments honge. So what should we consider your gross margin trend be like? So steady state. Now suppose all these launches, suppose you are not launching anything new, and these launches, you continue with the launches that you have already launched, and they stabilize, right? So you get to know exactly what the consumer taste is. So what will happen to your gross margin in such a situation when you reach a steady state in terms of the lines that you introduced? And second, because you are introducing new lines, what more variations can we see on top of that?
Okay, so I will explain you this. There is a lot of learning which have went behind this. Okay, that how to launch and test new products without compromising much on the margin, right? So say women wear. When we are coming up with women wear, so what we have done is we are not coming up with women top wear. So women top wear is one product line that it comprises of around maybe 60% of the women's wardrobe, but that is one product line which keeps changing. So there is a lot of variations there. So we are coming up with women bottom wear first. So what we saw is that there is more stability in women bottoms wear in comparison to men's women top wear. So we are coming up with products like denims, women trousers and stuff, where the design element is not too high, where the changes are not too much. So that will help us, experiment with, lesser hit on the margin, number one, and bring out the hero products faster. Number two, once we build that, then gradually we will get into the women top wear. So quarter two, we are only coming up with women bottom wear to keep it stable. Number two, with kids wear, we are doing the same. We are not coming up with kids core fashion products immediately. We are coming up with kids sportswear, kids swimwear, and kids cot sets, nightwear type of product line, which is again, it's like a commodity thing, but we add on to the fashion element and latest trends and cartoons and other things over there. So again, establishing ourselves over there, making the algorithm understand that we are there, this brand is doing well, and then experiment with the other fashion products. Number two, the point is now our menswear line is established. All our new categories are already established. So obviously now there we can, have the economy of scale advantage and also press harder for better margins.
Got it. Got it. Is a 25% gross margin, uh, will this sustain? Or will the we see slightly like आपका women's wear or kids wear का जो launch होगा, how big in magnitude will that be compared to your existing sales?
See, we always go soft in when it comes to any new product line. We don't believe in going massive with fashion business. We always like to test, get the results from whatever we have tested, and then go heavy on it. Then we back
Okay.
it by advertisement or wider line and other stuff. So women and kids both are going to be very, in terms of volume, in terms of quantity, we are going to come up with very small quantities. The line is going to be wide. So say example, a women wear, we are coming up with almost 70 options, 70 styles. But each style, we are not manufacturing more than 200, 300 units.
Right.
So in terms of
Got it.
entire volume, it is not much, but as a line, the end customer will see it as a 70 design portfolio. So same with the
Right.
kids wear. So in menswear,
Understood.
we can keep pressing for the margin. Women and kids, again, however, whatever research we have done is done, but still the market will decide what they are buying, what they are not. So
Right.
once get to know that, then again in the next quarter, whatever becomes a hit, we will double down it, go with a wider quantity and range, maybe more colors in the same products, and cut off whatever is not selling. So again, because the launch quantities are lesser, so the hit will be lesser.
Understood. And so okay. Okay. And so when your existing lines and the new lines, इसमें आप inventory कैसे manage करेंगे sir? I mean, how do you manage inventory? So you mentioned that the returns are very low for you compared to
Right.
industry standards.
Right.
But still, I'm just trying to understand, sir, how will your working capital requirements change? And how will your margins change as the company scales up? And if I remove the kids and women's wear as of now, your base business, which is purely men's as of now, how much is that expected to grow over a period of time? And whatever gains you will have in the men's wear, sorry, there's another hand. I'll go back in the queue after this question. If you can answer this.
So your question is how much growth we are seeing only in menswear?
In menswear, how much will women and kids wear add on top of it, and how will your working capital change because of these?
Okay, so number one, I'll answer the working capital thing first. So as I just told you, key women and kids wear launches in terms of the line, it is going to be wide, but in terms of quantity, it is not going to be too much. So I don't see
Okay,
that taking too much of a hit on the working capital thing. And
fine.
coming up, with the menswear point. So for menswear fashion, we are trying to, grow both horizontally and vertically. So as
Okay.
I just explained you, till last year, we were there, present at 8 e-commerce platforms. Today, we are there at 10 plus.
Okay.
We have already launched in quick commerce. We are
Hmm.
expanding our footprints in the offline segment as well. We already have hired sales persons in 8 states of the country.
Hmm.
So what we believe is that more and more design options, trendy options to the customer, and selling it through all the major channels will give us a
Hmm.
good growth. As I just mentioned during my deck presentation, that we were never too heavy on winter wear. So as I just explained that we go soft first. So winter wear is something we, since last 2 years, we have been experimenting. And
Hmm.
last year we got some good results in winter wear. So this year we have the right data of how to go about winter wear. So we believe that our winter wear is going to significantly add on to our top line this year. And in winter wear, the bottom line also, is better generally because it is
Right.
seasonal goods. People want it immediately, and more of
Right.
fashion can be portrayed in winter wear. So 2 years it took us to, soft launch it, get the data correct, get the answers from the customer, what is selling, what is not, what fit, what not. So this season, like last year, we launched around 70, 80 options of winter wear, and that also not with too much of depth. But this year we are coming up with 300 plus options in winter wear only. And among that,
Okay.
around 200 options are coming up with huge, huge, quantities. So we already have
Okay.
the data point now that how to market it, how to sell it.
Okay.
So these are the things
Understood.
which will bring growth to us, and also the quick commerce. We are looking at quick commerce to scale rapidly for us. It has just been a month. We have seen very good tractions, and we believe that being available within 10 minutes in 76 cities to 100 cities now, if we add on the other two channels as well of quick commerce. So
Right.
this is huge. It can add on to any given numbers. And also the kids and women wear line, if that can go in kids wear in quick commerce, that can also help us scale rapidly.
Okay. Sir, I have other questions, but I'll go back in the queue. There's another participant who
Right.
has raised
Right.
her
Thank you.
hand, it seems. Yeah. Okay. Thank you.
Thank you. We take the next question from Isha Agarwal. Isha, you can unmute and answer.
Yeah, hi, good afternoon.
Hi, good afternoon.
Yeah, so my first question is what are your various segments that you are targeting, and what is the revenue expectation from those segments? Like, which would be the top two, three segments that you would really want to target where the margins are really good going ahead, like after 2, 3 years of market scaling and everything?
So it's going to be menswear, women wear, and kids wear, both fashion and sportswear. And then the channels are going to be e-commerce through marketplaces, quick commerce, and our distribution network offline. So these are going to be the three channels. The 15-20% white labeling, which we have been doing, we will keep on doing. So I believe that 50 to 60% business will come from e-commerce. We expect quick commerce to grow from zero now to 5 to 10% in next a year or so. And the balance will come from offline channels.
So among the segments, are there any margin difference that you guys have? Like for men's, maybe the margins are high, or for the kids, any differentiation among the segments?
So I believe women wear has a little better margins than menswear. So menswear, but if you optimize your inventory, if you optimize the products you sell, then you can obviously come down to almost similar margins. With the women's wear, there is a lot of rotation of fashion, which is far lesser in menswear. So these are two very different ball games. So I believe that, if in terms of selling the same product continuously, similar products continuously brings out better margins to you as a brand, as a manufacturer. And in women's wear, again, the bottom wear, I believe, will have better margins. The top wear will have too many experimentations. We'll have to have that line, but the margins will not be, as compared to the bottom wear. But average out, it will be better than the menswear.
So is Forcas into outsourcing, or we are completely manufacturing it ourselves in all these segments, or there are specific segments which have been outsourced?
We are completely into outsourcing. So what we do is we find the latest trend which we want to sell. We do our sampling, our costings around it. We have a design team to do that. Then we have our fabric sourcing team, which knows what exact fabric will go in what. So we develop fabrics through manufacturers, or we buy it through different channels, and we get our complete stitching outsourced. We also buy out ready garments, from our nominated suppliers, who have been working with us since long and have been doing the same product day in, day out. So we are an asset light model. We don't manufacture anything. We are here to build the brand and we want to focus on that.
Okay, one question, maybe a very futuristic one. Are we focusing on eco fabrics given the environmental concerns that we are seeing right now? So, any plans to add on to those?
Not for our business. Our customer is the mass janta of our country. Means apparel is the last thing they will, think about, being eco-friendly and all. So at this hour, our brand is not positioned there. I don't see us, going that way. Though we use a lot of recycled fabric, recycle yarn fabric in our product line.
Mhm.
Because again it is eco-friendly also, and it is way a little cheaper than the raw yarn.
Okay, so the other question I wanted to know is like, since you guys have been focusing on Zepto or quick commerce, how much inventory or the working capital margins you guys are ready? Like, is it like really affecting your cycle after after you're going to increase the quick commerce segment part channel of the business? Like, how much
Not
difference?
exactly. Not exactly. So the quick commerce, the best part is it is more of the basics which are going to sell. And
Okay.
whatever basics we keep an inventory of a certain number of days. So among those certain number of days, only one part of the inventory goes to the quick commerce dark stores from where
Mhm.
it is distributed, and we weekly replenish it. So
Okay.
basically, the inventory over there is not going to be for more than 30-40 days.
Okay. And one more last question that I would want to really know. So now, given the HRX brand, I really want to know what is FTX doing different from HRX? And second part of the question is, what is HRX doing which you guys really want to target and become like, yeah, this we would want to achieve? So like both the ways.
So FTX was actually fitness exchange to begin with. So we started as a mass sportswear brand, but because of our quick traction with the customer, and the customer really liked our product line, we got good numbers initially. So our customers and the platforms, they both pushed us to not just stay stuck being a sportswear brand, and we cut the name short to FTX from Fitness Exchange, and we got into casual wear also. So HRX is only a sportswear brand. We are a casual brand which also have sportswear. Number one. Number two, HRX target customer and our target customer is pretty different. HRX hardly has maybe 10-15% of its range below 599, and 90 to 95% of FTX range is below 599. So the target customer is completely different.
Okay. Okay. Thank you so much, Sailesh. That's it from my side.
Thank you. Thank you.
Thank you. We'll take the next question from Harshil Shah. Harshil, you can unmute and ask.
Thank you for the opportunity. Sir, I just had a few questions.
Yes, sir.
So considering your price point and strategy, what's your right to win in a competitive market in online as well as offline?
So see, we don't see this as a competition. We see that, this is a huge opportunity. So it is around 20-25 lakh crore market where 80 to 95% of the goods is being sold under 499. And then we don't have a single national brand over there. So if we just try to, give the customer the right product at the right time with convenience. So there is a lot of scope of building a brand there. So we are on track to do that. We believe another couple of years we will stand out as a brand in the same category, which is the biggest segment in our country in apparel.
Okay, sir, got it. And sir, what's your geographical breakup of sales in the offline channel, if you could?
So offline channel, our goods get sold in 15,000 plus retail stores across the country. So North India has more of our distributor network, Our distribution is done mostly in Delhi, Punjab, Rajasthan, Madhya Pradesh. Also, Bengal is doing very good for us. Assam, we have just begun. Assam is doing good. So it's more of North India. And when you go online, it's more of South India for us.
Okay, sir, understood. And how are you aligning design and color choices to different regions? Because in that case, volumes can never be achieved. And how do you see your revenue mix 3 or 5 years down the line in three channels, namely offline, online, and white labeling?
Okay. So question number one was the color taste, across the country. So
Yeah.
now I believe, it has changed. It has really changed. I'm into the textile business since 20 years. So what I see is that, earlier the difference of, choice was too big. But because of social media and, say that people are traveling more, the taste is becoming more and more global. So nowadays, I don't see there is the huge difference left in terms of sizing, also in terms of color also. Earlier, if the difference was say 50%, now the difference is hardly 10 to 15%. So what we do is when we launch any product, it is generally live from our own warehouse. And then we see which area is consuming more of what. So whatever is consuming more, we send our goods in that state and keep the stock in that warehouse to optimize on the demand. So this is the strategy where we optimize the demand of a particular product from a particular region.
Okay, sir. And what about the revenue mix?
So I see 50 to 60% of our business coming from e-commerce, 5 to 10% from quick commerce, and the balance of.
Okay, sir, got it. And so one last question. Which regions are you looking to kickstart quick commerce first and how to plan to grow it pan India?
So quick commerce, we started with North India, but now we are available everywhere. Means Zepto is available in 76 cities and we are available in all 76 cities.
All right, sir. Great. That's it from my side. And thank you.
Thank you.
Thank you. We'll take the follow-up questions from Agastya Dave. Agastya, you can do it.
Yeah, hi. Thank you very much for the follow-up. So, the offline partners that you have mentioned in your presentation, all of them are showing very nice growth. And again, the targeted segment and the price points that you are targeting, again, those are also showing across the industry very high growth rates. So, how do you see the growth panning out for you over the next 2, 3 years? Uh, that is the first question. And last question for the day from my side is, what kind of capital requirements will you have? To me, it looks like until unless you're like, if the working capital doesn't deteriorate substantially, you won't need any capital. But still, what are your thoughts on it, sir?
So I will come to how to grow. I will tell you, Agastya, right? Yeah. So, Agastya, how it works is, we are a capital light brand in both ways, in terms of manufacturing also and in terms of front end also. So we don't have capex for a store to sell offline. So most of the online brands today want to go offline, but again, they need huge capex. So we have created this distribution channel where everything is sold outright and we don't have to pay any capex for that. So it is far easier to grow it. We can deep down on district wise distribution network and we can expand that sale anytime. And we are doing that gradually, we have a process to, identify which distributor, which area to work with. And we do that. Also, our online sales also helps us knowing what region our goods are selling more. So last year, suddenly we saw that Tamil Nadu is on a jump in terms of online buying for our brand. So we found somebody and appointed him who already had a marketing channel in Tamil Nadu, and it gave us amazing returns. Means the sales, offline sales also shot up there. So this kind of data, being online and offline both, helps us know which area to go first with, wait for with. So there are too many options for us now to grow offline. And also growth through quick commerce, I see it as a significant portion. quick commerce is going to be huge coming forward. And yes, the capital requirement thing, if you have done the maths, we would not need much. If required, we can obviously arrange it ourselves, or we can buy get some CC from bank or something.
Understood. So 25 to 30% top line growth seems achievable to you?
So we are targeting 30 to 40%, anywhere between minimum 30 to 40% growth every year for the next 2 years at
Okay.
least.
Okay. And the margins, do you see these continuing or some pressure on it when the new lines are launched?
See, I believe, the margins are going to get better by the day as your brand,
Yeah.
wins the trust of the customer,
Yes, that bit I agree, sir. I agree. Yeah.
and
Yeah.
with a
Okay,
price
sir.
point of ASP of 400, if we get 10 rupee extra also, it is like 2.5%, which goes straight away in your net margin.
Right. Thank you very much, sir, for answering all
Thank you.
the questions, sir. I hope the annual report will have detailed schedules so that the question that I asked you at the beginning of the call gets properly answered, sir.
Yes,
Thank
yes.
you very much, sir. Thank you.
Thank you.
Thank you. We'll take the next question from Kush Tandon. Kush, you can unmute.
Yeah, hi Sailesh. Thanks for the detailed presentation. I just wanted to understand the quick commerce business a little bit in more detail. So
Right.
firstly, I think the question was how difficult is it for a brand like yourselves to onboard on a pan-India platform, and what it entails in terms of from the platform's perspective, what all things do they look at in terms of the product, the pricing, the quality, etc.
So, Kush, there is a huge queue now, to get on board on quick commerce. Everyone wants to be there. And with quick commerce, there is a thing, they have a limited size of their dark store. With
Yeah.
e-commerce, everything is virtual, so you can keep your stocks anywhere, right? But with quick commerce, they have a designated area. Only in that area they'll be able to store. So they are very choosy when it comes to brands, with whom they want to work, whom they want to offer to their customer. So we have been fortunate that our customer review and ratings and our SEO search of our brand has been pretty high. So this is the reason that quick commerce companies have contacted us, and they have seen the performance through online marketplaces. They already have the data from everywhere. So this is the reason they started with us. In fact, we only started with one single design option with 7-8 colors for the first month, and we saw amazing numbers coming. So this is again, it was a trial for us. So we are going to double down this. We are trying to launch 50 new options within next 30 to 60 days, and trying to expand rapidly in quick commerce segment.
And so, what are the margin that the platform will keep? I don't need hard numbers, but is it better than the regular e-commerce platforms, or are they charging more higher margin from you?
So there is a simple logic, in general e-commerce, the return goods, whatever comes from customer, the cost of the return is borne by the seller, by the brand. In quick commerce, there is no return. The return doesn't come back to me. It goes back only to the dark store, which doesn't cost much. So obviously that is a significant portion of the margin. So in quick commerce, the margins are higher. Also, the quick commerce customer is very different. It is not just the bottom of the pyramid, customer. It is more of a metro customer who is okay to pay. He's paying for convenience. He's paying to, get the stuff in 10 minutes, 20 minutes. So yeah, means quick commerce obviously has far better margins than e-commerce.
Okay. And sir, just on the very first question which was asked about the gross margin profile, should we think about this as a 30% gross margin business going ahead? Because everything then trickles down from there, and a 10% kind of an EBITDA which you've achieved this year, should that be a fair understanding?
Yes, around that, means nothing less than 30% of gross margin. 30% is going to be the bottom thing. And yes, 10% EBITDA, we want to, improve on that.
Okay, understood. And so the final question on inventory, obviously, this is a business of inventory management. So how are we ensuring, a lot of money doesn't get stuck in the inventory? Obviously, you scale up products as per their response on these platforms, and so the inventory management is a little better. But sir, our cash flow from operations continue to be little negative. It has significantly improved from last year, but still, I'm saying that. Inventory is a line item which is critical in our business. So any thoughts on that? So how will we manage that and make positive operating cash flow?
So we have developed an in-house inventory management system, so which captures everything, all our goods, across the 1600 options we have into 4 to 5, say, sizes. So the 8 to 9,000 unique SKUs we have, we get the data every week of the DRR, the daily run rate or sale rate of each size, each color of each product. And we have, since last 1.5 years, we are not producing anything monthly. We are only buying weekly. So whatever sells each week is bought every week, covering the period of procurement. So we take our stocks only as in two categories. Number one is set goods, the goods which are selling into the number of days we want to hold the goods for. And number two is the new testing products, whatever we are going to test. So this is the way we have a leaner inventory model. And not too much of a any option is not dead with a bigger quantity. So whatever is not working is already there in only smaller numbers.
Okay, and so there is you don't plan to have your own manufacturing in anytime soon, right?
No, we want to be light. This is working for us. See, when you do your own manufacturing, you can only manufacture a certain set of products. You can't manufacture everything. And we want to be a brand and not a manufacturer. We want to go into men's, kids, women, all three, because again, we see this segment has a vacuum for a brand. And we want to have all the categories of all the three sections. So manufacturing, I believe, it's easier to source than do it.
Okay, and so just one question, last question. What will be our percentage of discounted sales versus full price sales? How much do we need to liquidate at discounted prices just to get the inventory off our balance sheet? Do you track that metric?
Yes, we do. Actually, only the new products which are launched and which doesn't get traction is that goes in discount. And number two, whenever these e-commerce companies come up with their festive discounts or something, that is a period that we have to offer some discount. But that is not to liquidate, that is to generate higher sales at that period. So I think it is hardly 1.5% of the total inventory which is diluted.
Okay, understood, sir. Thank you for answering all the questions. All the best to you.
Thank you very much.
Thank you. So since that was the last question, do you have any closing comments?
Yeah, I feel that we are on the right track. I'm really excited about the quick commerce thing. I think we have done great research on women wear, and we have done a good job to begin with the bottom wear first and not with the top wear. I believe that women denim at a certain price point is a huge gap in the country. Getting quality denims and quality trousers for Indian women who are going out more, working more. There is a huge gap to build a brand. We are targeting that white space. Also, in terms of winter wear, we are really excited. We see smaller category products which people don't notice also, such as a wind cheater or lighter wear jackets. There is no brand under 500-600 rupee, and the consumption is humongous. It's huge. So we are targeting that bracket as well. In terms of quick commerce, we believe the swimwear and the sportswear is going to do pretty good business for us. So we have our plans, in line, and we're excited to execute it and see how it goes.
Thank you, sir. And thank you to all the participants for joining this call. And thank you to the management for your time. You may all disconnect now.